Folks, I appreciate you taking your time out tonight to join us. For those of you who don't know, my name is Saint-Gerard, and I want to introduce my co-host here. Uh, I'm going to let him introduce himself. Actually, no, I'll introduce him. Wayne Scully, the CPA, the one and only. Thank you for joining us for this conversation. And today we want to talk about you receive your taxes, or this is after you file your taxes. What should they do next? So it's a common question that comes up a lot, especially in my side of the tracks. I'm pretty sure with Wayne, he can say the same exact thing. But before we jump into this, I just wanted to say when we come across a lot of homeowners basically from Queens, Long Island, Brooklyn, the Bronx, and right after tax season, we tend to hear the same questions. And that's, what should I do with my house right now? Does this make sense to sell, hold, or wait? So tonight we really want to dive in and give you some clarity of what your situation is and what your options are. So this isn't a sales pitch. This is a strategy session to help you understand your options so you know what to do and what's right for you. And we'll be leaving some time at the end of the session basically to answer some of your questions, because I see a few of them coming in as we speak. So let me start with framing what's happening right now. The market is still active. A lot of people are asking me, is it active? It's not. It is active, but you got to be strategic when you're putting your house on the market. Buyers are more selective right now. Pricing and preparation matter more than ever. And you got to well position your home if you wanted to sell, because houses that are selling right now are well positioned. And I'll get into that more, what that means. Now, right after tax season, when a lot of homeowners are starting to think, should I stay? Should I sell? What are my options? Here, we're going to get into the nitty gritty. Where people get stuck is not knowing the numbers or timing. Financial impact is very important. What they can afford next and whether they're ready. These are common things that come up a lot. And what you really need to understand is the numbers, and it's crucial. So our CPA, he's going to get into that. So my first question to you is, when should homeowners be looking after they file their taxes? What should they be looking for or looking at?
Well, first of all, hopefully the taxes were filed properly. That's, that's the first thing I'd say. When it comes to real estate, make sure you get all your deductions, right? That's really important. So they just increased the SALT cap of this round. I'd say it was this year or late last year, maybe. I'm not quite sure when they passed that, but I know that some of our Congress people worked hard to get that in because they know that New Yorkers especially would pay high property taxes, right? So that cap of $10,000 was not good for us in New York. So, and many other states like California and so forth. So they make sure you get your deductions, right, for interest you paid on those loans. Of course, there are limitations on who can get that as well in terms of the value of the home when you purchase it. So that's one thing to bear in mind. And with respect to real estate, and just so, like I said, in general, just make sure that you've, maximized to the extent you can, because the tax return prep is historical in nature, but you want to make sure you plan ahead. And I know we're talking about what happens next. Well, what happens next is, what do we do for 2026, right? Are we prepared for maximizing those deductions as we go through this year? Because maybe we didn't do that last year. Maybe we didn't have effective planning. As you said before, timing is important. So now is the time to speak to your advisor, whether it be me or someone else. If you don't have one, definitely give me a call. But if you do have someone in your hip pocket, if you will, or back pocket, whatever pocket you have, reach out to them to make sure you're getting the most out of that, because tax purpose, again, it's after the fact, right? So you want to be proactive about planning for the future, for the rest of this year and beyond.
All right. Well, I want to go back to something you mentioned. You mentioned salt. For the viewers who are watching that
Yeah.
might not understand what salt is, could you break
Right.
that down for them?
State and local taxes. So that's property tax, state income tax you're required to pay when your employer usually withholds that from your paycheck. So it's typically your state sales tax too, depending on where you are. Some people don't have a property tax, but you're able to take a sales tax as a deduction, as an alternative. So that's what that's about. So they basically put a limit on that. It used to be $40,000. It used to be unlimited, and it was 40,000. They brought it down 10,000, and they brought it back up, depending on the criteria if you meet it. So that's what salt is about. It's
Uh,
not being salty. It's just salt.
well, you could be salty if you have the wrong person doing your
That's right.
taxes.
That's right. If you have the wrong person advising you, you could be salty. Indeed, I agree with you, Brother Evans.
When the IRS is knocking on your door, you could be very salty.
You could be very salty. I agree with
Uh,
you 100%.
all right. So our next question is: when someone is thinking about selling, what tax considerations come into play? You kind of went over some of it, but let's dive deeper.
So when you're selling, when you think about selling, that's again, planning is important. That's really key. Planning and timing. So I've had people come to me with a $50,000 tax bill because they didn't properly time things. And they waited another 6 months, they would have avoided that tax bill altogether. So there's something called capital gains tax, and that could hit you like a ton of bricks. So depending on what type of, if that's your primary residence or investment property, that could make a big difference, and depending on what the gain is on that. So I'm not going to go into all the minutiae about it, but the bottom line is that planning is key. And so that's one thing you want to be aware of before you decide to sell. Unless it's something like an emergency, can you think of, I guess there are cases where people may need to liquidate and get out of town. I guess there are cases like that. But for most people, it requires some thought. Like, if you're going to upgrade to a big house, which is, your forte, Evans, someone wants to move from a co-op because now they have a growing family. They want to get, a a 4-bedroom home or whatever, then they're upgrading, right? But beyond that, I mean, the idea of someone like just selling just off the cuff, something that happens so often. That
It
being
really it
said,
really depends on their situation because everybody's different. There's no one item that fits for everyone.
true, no, I get it. But I'm
It
gonna say
depends on where they are in their life.
it's a big ticket. No, I get it. It's a big ticket item. And when you're gonna retire, let's say you're gonna retire, you're gonna sell your home because you want to downgrade, right? You want to move to Florida or something, right? You want to sell your home. You're gonna be thinking about this. You're gonna be thinking about this probably for at least a year, I would say, right? Not just like overnight, right? You don't get up one day and say, I'm gonna sell a house. It's especially if you have your wife is involved. If you're a man, your wife or the opposite is true. If you have a female partner, and or, no, whatever it is, the point is you have a
Whatever
partner,
the combination
whatever the
is.
combination is. Um, so if that's the case, you guys are going to discuss that, right, before you actually act. So I'd say in that discussion, you should loop in your,
Significant
you know what I mean,
significant other.
your tax
Yeah.
force. Yeah, for
Yeah.
sure, because you don't want to, like I said, end up in a bind where you get this big bill from theirs because you didn't know that, hey, you're over certain thresholds, and now part of that gain is taxable, right? And you don't have the money because you already spent it. So, you know what I mean? So again, when you sell the home, make sure you talk to us. Even if you sell the home, let's say it's not all done, make sure you cover the taxman because the IRS is your silent partner. So make sure you have that money set aside. Don't go spend it all at once because you may need some of it to pay that bill.
I've been seeing this a lot where, couples they have their own assets as separate assets, and they
Mm-hmm.
get together and they have everything joint, and then
Mm-hmm.
sometimes that partnership ends, and that's one of the reasons why they need to sell, so whatever it's covered
Mm-hmm.
together.
True, like a divorce.
Yeah, like a divorce, and
Yeah,
they're
yeah.
just dividing the assets and
Right.
whatnot.
I get
If
it.
there's
I get it.
anything you wanna talk about when it comes to that?
I mean, when it comes to people breaking apart, I mean, if you guys can do it, sometimes it's never. I shouldn't say it's never. It sounds like I'm conflicting myself. Sometimes it's not an easy road, and sometimes those situations are very tense,
Yes.
and people aren't thinking with clear heads. And so they make, rash decisions that could later harm them, from a tax standpoint for sure, if nothing else. And you want to, probably allow one person to purchase the shares of the other person, the portion
Of
that
the
they
other
own
party.
of the other party, or come together and say, listen, I mean, whatever it is, at the end of the day, we're going to split. If we both were party to, purchasing this home, we want to make sure that we both get the most out of it. And you do that by, trying to keep a cool head, speaking to your tax advisor. If you can't speak to them, the person together, maybe speak to them separately, but having the same goal in mind. We're going to try to sell this property and get the most out of it, and at the same time save the most taxes. So if you rush into it and sell it like just off the fly, you could be faced with a big tax bill, which is what we try to avoid. And that's where planning is important. I go back to plan because that's the underpinning of everything, right? Especially with these high ticket items, whether you're buying or selling, planning is key.
Okay, so the next question I have for you are, what are some of the common mistakes that you see homeowners make this time of year?
Yeah, I mean, a lot of people assume equity is all their cash to spend. right? And that may be true, right? That may be true, but there's a tax consequence to that too, depending on how the money is used, right? So be mindful of that. If you take cash out and then you put it back into the home to do a major project, that serves two purposes. Might help you on the tax side, but it certainly will increase the value of the home, as you already know, Evans.
Mhm.
Um, so you don't want any surprises. That's what it is. You want to be structured in your approach. You want to make sure you think things through before you act. Okay. So, I mean, putting on equity just ad hoc, just to go have a vacation like south of France or something. I mean, you could do it. It's your money, of course, but I just don't know if it's the wisest thing to do, especially from a tax standpoint.
All right. So from what you're telling me, it sounds like you going into this situation, whoever is watching this right now, put everything on the table with your professionals that you hired, whether it's your tax professional, well, actually, with your tax professional,
Mhm,
with your attorney, with your realtor, whoever it is that you're working with, the team that you built, and your spouse, whoever your family members are that are involved in this, basically put everything on the table
mhm.
because we can't help you if we don't know what's going on. So don't
That
hide things, put everything out on the
that
table. The most information we can get out of
all
you
we
and
know is the
in
better
the
we can help.
situation, it's gonna help your situation also because
Sure,
we can't help you basically if our arms are tied behind
sure,
our backs.
sure,
So I
sure.
think that's what I'm getting for you. And the next question I have is there a point that it makes more sense to sell versus hold? As a realtor, I have my answer, but I want to hear your answer.
Well, clearly, if you hold it, you're building more equity in the home, and you may have a bigger gain when you do sell. If you hold it, you could basically create an estate for the generations that follow you. That's a good reason to hold. I don't know if there's um either one could make sense depending
Yeah.
on what your goal is. Depending on what your financial goal is, from a tax perspective, the longer you hold it, if there's appreciation over time, you're gonna be looking at a bigger gain, which may exceed certain thresholds, which then may cause you to, end up with a tax bill if you're not planning and structuring it properly, right? The flip side is that if the goal is to hold, because I like to buy and hold myself. So if the goal is to hold, then you must have a plan as to how you're going to pass that along to the people after you, right? So, and if you do that properly, then they get the tax benefit from that too, something called a stepped up in basis, right? You've probably heard of the terminology before.
Yeah.
So, if you can take advantage of that tax rule, that's going to benefit your generations to come. If you keep passing that buck down the road, if you will, that home is just going to increase in equity over time. Before you know it, you might have a fortune on your hands, or you're not you, but your offsprings. You know what I mean? So that's the one of the advantages to holding. Selling, I mean, if you need the cash, if you want to invest in something else, if you want to, if you're investing real estate, not say your primary residence, you could probably, you know, unlock certain tax strategies that will allow you to avoid the capital gains on that sale. Again, Evans, I'd like to say that there are advantages to both, from a tax standpoint.
That's very helpful, everything you just suggested. My answer is similar to yours. It really depends on your situation. The viewers who are watching this, it depends. Do you need the money? Do you need the money basically for your life situations? You need to fund certain things, or do you need to take it out and help out a family member or anything along those lines? Or
Mhm.
you can hold it like you said also. You want to build financial wealth for your family. You keep that into the family and basically pass along. Obviously, make sure you get a trust. Do not just leave it in the will. I mean, you wanna put it in the will, but make sure it's a trust. That's more safe than anything else. But definitely have these conversations with your family members, whoever they are, and then once you have the conversation with the family members, talk to your professionals, whoever they are, and make sure you put that plan into action. So if something happens, there's a clear documentation of what your plans are, what your will and testament is for the next people to carry forward.
And I would say, just to add to that, I'd say people who, at least if you don't have a trust, just saying your point is well taken about the trust. If it's only a will, you're still better off than not having anything at all. I've
True.
seen people who've died in this intestate, and that money that basically goes into the court system. It's like a long drawn out process, and really who wins? Attorneys. Attorneys get paid big bucks to sort that out. So you want to at least have a will, and even to Evan's point, you want to
Trust.
have a trust, right? And have it properly structured. talk to an attorney about that to get that done. But of course, there's a cost to it. But again, in the long run, it may be worth the while for you. Uh,
There's more of a cost if you don't get that done
sure.
than getting it
Right.
done. But
Right.
continue where you.
And also, alternative to, as you know already, Evans, the alternative is to selling is to refinance. You could refinance the property too and get cash out.
Yes.
You needed cash, right? Or you could do a home equity line of credit or loan or something and get cash out that way too. So, but again, there are tax ramifications there too. So just be mindful of that. But either way, right, you're looking at potential ramifications where you sell, you hold, or you refi. So, that's
There's plenty of options is
right.
basically what we're trying to
For
tell
sure. For
everybody.
sure. For
From
sure.
a real estate standpoint, this is everything pretty much that we mentioned connects. Some strategies, I'm actually looking at my computer screen. I have all my notes here. Taxes show your financial positioning. Your equity gives you options, and together they drive your decision. One of the things I like to tell people is basically when you're selling actually looks like what it looks like today is you have to be prepared, the whole family, not just you, the decision maker, everybody in the family, the whole set has to be prepared with what's going to happen. You got to price it correctly. Marketing and positioning it makes a difference whether it's going to sell or sit on the market. There is no perfect timing. It's all about your situation, whatever your situation is. Have that conversation with your realtor. Have that conversation with your attorney. Have that conversation with your financial planner, your tax preparer. Have those conversations with them. Where the most homeowners go wrong is waiting too long, guessing their value, or going to one of those online portals that I'm not going to mention their specific names, but you know their names. You go into one of those and just getting the value from that. They have not taken the time to actually look at your house, visit your house, looking on the inside, look on the outside. They haven't done that. And not understanding your cost basically when you're selling a home. Wayne just mentioned basically there's a lot of taxes that you have to be mindful of. We'll go over the finances with you, but you definitely want to have a conversation with your CPA when it comes to that. And the most important thing is making decisions without a plan. Like if you want to fail, you make a decision without a plan. We don't want to see you do that.
Fail to
Um,
plan, you plan to fail.
Exactly. Now, speaking of planning, what a smart plan looks like is understanding your numbers, understanding your options, building a timeline. You need to have a timeline. That's something you're going to go over with your professional. What your timeline is, where realistically, if you're buying after you sell, if you're renting after you sell, or you're going to be living with other family members, you have to have a timeline. And depending on if you're doing buying and selling at the same time, you're buying another property, whether it's in state or out of state, you want to make sure you have the right timeline. So tell your professional everything that's going on, what your process is going to be like here in New York or elsewhere. If once you're purchasing elsewhere, we need to have a conversation with the other agents on the other side as well. Things do adjust as is needed, so always keep that in mind. And everything's not strict, but basically there is a guideline to this stuff. But you have to have an open conversation throughout the consultation with with your professionals. Every situation is completely different, and that's the key. It might seem impossible to you, but it's probably not to the professionals that you hire. So just keep that in mind, and please, 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 please listen to your professionals' advice. They've been doing this for quite a while. If there's something that doesn't come up often, they're gonna trust that they're gonna educate themselves and getting the right information to you so you can make the best decision for you and your family. I think my next thing I wanted to open this up to a couple of questions I think a few people have dropped some questions in the chat, and let me just look at the chat section for a second.
Hey,
Bear
while
with.
you're doing that, Evans, I just
Sure.
wanted to say something to you. Just so people know, there is a difference between a tax professional and a tax preparer. I'd say a tax preparer is part of the, I guess, the broader, broader category, tax professional, but not
Mhm.
every tax preparer does tax planning. If you're looking to do something proactive, you're looking to do something non-reactive, meaning that you're not trying to fix something once the horse has already gone through the stable. You want to talk to a tax planner who is another type of professional who can help you, before you make a decision. As you're thinking about selling or buying or whatever, talk to a tax professional who is a planner who can then kind of navigate some of the pitfalls for you. In my case, I create tax plans and actually give people strategies in those plans and actually lay out like, how much they could potentially save on a particular strategy, right? So talk to someone like that. It's gonna, like anything else, right? Like with the estate planning vis-a-vis trusts, it's gonna cost you really, but it's gonna be beneficial in the long run. So people ought to know that not every preparer plans. So preparers, they typically get the information, they get the 1099, the W-2s and whatnot, and they input the data. I'm not saying it's an important part of the process, but that's after the fact. You want someone who is going to be able to look at your situation and make some strategic moves on your behalf to save you some money. So when you file the taxes, you're not looking at a $50,000 bill, you're looking at a $5,000 refund, let's say, just for argument's sake. So I just want to kind of point it out to folks.
I'm glad you brought that up. It's definitely, if you don't know who that person is, you haven't identified that person for you, reach out to your realtor. Hopefully that's me, and I'll point you to the right person. Hint, hint. He's on the screen right now, so he can definitely help you. All right, so we got a question from John from Garden City. He's asking, if I sell my home and am I going to get hit with taxes on the profit?
Yeah, as I said before, if you sell your home, depending on is the home your primary residence, is your vacation home, is your investment property, it varies, right? The tax result will vary.
John is saying he owns the property.
He owns the property. Okay. All right. So if you own again, if you own the property, but is it your primary residence? Is it your primary residence or is it
Yeah,
your
no, it's
investment
his
property?
primary.
Okay,
I'm
okay.
sorry.
Okay, okay. So yeah, so depending on what the gain is, and again, there's a way to calculate the gain. There are things that, and that's why it's so important. You know, a lot of things you mentioned before. You asked me before about mistakes that people make. One thing is that they don't track the basis. Basis is like your cost, what you bought the thing for, what you bought the house for, and then whatever improvements you made, not repairs, not broken lock or whatever you fixed. I'm talking about a kitchen remodel or a bathroom remodel or something like that, an extension on the home. You repaved your driveway or something. Those are capital improvements. You got to track those because those will increase your basis. Now, why is that important? That's going to ultimately reduce your gain, and the gain is what you pay tax on. So the lower you make the gain, the lower the tax is going to be. On top of that, again, like I said, there are thresholds depending on if you're single versus married, filing a joint return. There are certain amounts that you will not have to pay capital gains on, right? Once you exceed that amount, then you pay the gain. So potentially. So yeah, so to John's question, it's complicated. It's not just a simple answer, but there are ways around it. And if you have questions or concerns about that, definitely give me a call. We can talk that through.
All right, we have our next question is from Lisa from Huntington. She's asking, how do I find out what my home is worth right now? I'll answer that one very
Yeah, say that
simple.
one.
A lot of people go to those websites. I'm not going to
Yeah.
mention their names. Yeah, you'll get a range, maybe. But again, like I said earlier, most of the time, those websites have not come to your house to come visit it to look at what Wayne just mentioned, what upgrades you made in the house. That's something that you would definitely want to reach out to a listing agent, an agent who's familiar with the area, who can show you the comps of what homes sold for, what homes on the market are going for currently right now, and then give you the best advice possible. They'll give you either a range or basically, hey, if you put it on the market right now, this is what you'll probably get, stuff like that. So we use active data.
And that's
I'm sorry, go ahead.
that's not an appraisal, right? Just for the people listening, that's not an
No,
appraisal.
you can get an appraisal, but basically, if you want, you can get an appraisal or get a realtor. It's really up to you. The appraisal is going to cost you money. The realtor but is not going to cost you anything.
Right.
But obviously, the realtor is spending his time or her time looking up the information for you. So just
Right.
keep that in mind.
And I
And
guess
our
the appraisal comes into play when the bank decides to,
yes,
then
yes.
you're correct of the appraisal.
All right. So Anthony from Franklin Square is asking, are there any tax advantages to waiting versus selling this year?
Six, waiting versus selling. I would say the capital gains rules haven't changed. So waiting, I'm not sure if that's going to change, at least not for the better. There's been talk, and again, I don't like to talk about proposed legislation, but there's been talk about taxing capital, even more, taxing it more,
At the
right?
time of this
So
recording, at the time of this recording.
yeah, right. And again, that's not law or anything, but I'm just saying that if you wait, you might get into that scenario where they start a group moving more aggressively to tax that, right? There's a proposal, I believe, or it's probably I'm not sure. I think our current mayor is looking to tax certain properties too, just based on the value increase in the value. So I'm not sure if that's passed the city council or
I
not.
don't think it's passed yet, but
Yeah,
it's
so that's
talk.
yes, so that's something that, you may not wanna wait around for that to happen. I don't know if it's gonna happen, but I'm just saying. So, but I like to speak on what's currently the law, and the law hasn't changed when it comes to capital gains and how that's taxed.
All right, my safe answer is pretty much talk to your professional, find your CPA. If you don't have a
Mhm,
CPA, a tax
mhm,
preparer, a tax planner, excuse me, not preparer, tax
mhm.
planner,
Mhm.
find one basically that you trust and have that conversation with them and
Sure,
also talk to your realtor. If you
sure.
don't know anybody, we have 2 right here on the screen that you can talk to.
Right. Exactly, exactly.
Alright, we have the next questions from Danielle. She just says she's from Long Island. If I sell, where would I go next? That is a good question that comes up a lot, especially in today's market. A lot of people don't know where they want to go. Again, I bring everything back to talk to your professional, let them know what your concerns are, that you're
Mhm.
not sure where you want to go. Have an open discussion with you, the professional, and your spouse, whoever your spouse or family members are, what your options are. Do you want to purchase the next home? Do you want to be still in the same area? Do you want to be in another state or you want to relocate to another state, another country? There are options out there, but you definitely have to have the conversation with your professional, and then they'll lay out basically if you want to do X, Y, or Z, here's some options. Let's see what works best for you, what you're comfortable with. You're ultimately going to be the one who's making the decision, but you got to let that professional know what your plans are. Give us an inkling of what you want, so that way we can, point you in the right direction.
Say, Evans, about that, you don't sell properties in other countries, right?
I
Or you
personally
have
don't. Yes, I do have
network, you can
connections.
refer people
Yes.
to
That's one of the things I like to do is pretty much reach out to other agents in other states and other countries
Mhm.
and see, how we can help each other and our respective
Yeah, yeah.
clientele. So I do have a lot of clients basically who are leaving the country. They're leaving the state. They're going to another state. Some people want to be.
Going to see what if country have you seen people going to the most that
You
you've
know
seen
what?
that?
Right now, surprisingly enough, I've had a couple of people ask me, well, as I'm having conversations with them, they're thinking about going to Costa Rica is one that came up
Panama.
quite a few times in this month alone. What was the other one? Someone asked about Guyana. They're
Mhm.
going back to their home country and they were thinking about purchasing property out there. DR, a lot of people have asked me about that as well. And there's like a lot of international places, which I didn't
Mm,
even think a lot of New Yorkers were thinking. And not just, I got to clarify, not just New Yorkers. I speak to people all over the place. But some of the conversations I've been having right now, Costa Rica was top of the list, and
nice.
DR. Someone actually mentioned some parts of Asia,
Asia,
and I was kind of
Philippines.
surprised when we were having the conversation, but that came up quite a few times.
Interesting.
We have another question for you. This is from Robert. He's in Forest Hills, and he's asking, what kind of records should homeowners be keeping for tax prefer?
Yeah, as I said before, if you're from a homeowner's perspective, you want to keep your closing documents, right? Shows what you purchased the home for. That's going to be a very critical document when you decide to sell. All right, if
Yes,
if you're purchasing, you want to keep that document, and you want to keep documentation and support because it's not required for the tax return. The improvements and whatnot that you make, if you're unless you have rental income, but you will probably likely keep that. But for people who just own the home and just live there and don't rent it out, they would want to keep they should keep it. Excuse me. Excuse me. They should keep all the documentation that supports the improvements they've made, like excuse me, Evan. Sorry.
that's all right. So
They should
capital,
keep all
anything that they've done,
right. Like a
documents,
document,
purchase price.
receipts, contracts, whatever, anything that supports their the work they've done on their home. Whatever it has, usually something major. Right? If it's something simple or minor, no. But if it's like a whole remodel of the home, or fix the roof or whatever, replace the roof, I should say. Keep those receipts, scan them, and also keep hard copies, and maybe keep
I'm
more than one
glad you
hard
said
copy.
that. I was
So
just about to say the same thing
yeah,
about
yeah,
scanning everything.
yeah. Scan them.
It's
Keep
critical,
cloud.
basically.
Yep.
Things happen all the time.
A fire or a flood or something, you lose your
Exactly.
paperwork. You want to try to scan. I scan everything now, honestly, to be honest with you. But of course, maybe I'm kind of crazy with this stuff, but I try to keep my scanned copies in multiple places that just in case something goes down, I have it somewhere else.
You're not the only
But
one that does that. I
yeah,
do the
yeah,
same
yeah,
thing.
yeah,
At least I'm doing that now. In the
yeah.
past, I would have piles of
Well,
paper
yeah.
everywhere.
Yeah, yeah. I don't keep paper. I have a small office, so I scan shred. So I try to keep the stuff on the cloud or whatever, so I know that it's pretty much there for me when I need it. So, and if everything goes to hell, then I guess it doesn't really matter. But expecting that when I put the stuff out there, whether it's on a Google Drive or something, it's gonna be there when I need it. Obviously, don't want to put anything that's personal in nature there or that has person identifiable information on it because then you put your data at
Yourself at
risk.
risk.
You're at risk.
Yeah.
Yeah, exactly. Because you want to take your data and start doing crazy stuff with it. So, but yeah, but definitely keep documentation. That's a document. Because especially when God forbid, you face an audit scenario, the government is going to want to see documentation, right? So if you want to support your deductions, which by the way, every deduction, every item of income on your tax return should have some sort of support for it. So whether it's your W-2 that supports your wages, or your mortgage interest statement that supports the interest you deduct on the tax return, all that stuff should have documentation tied to it. So that's what I would say that they should do.
All right. And Chris from Whitestone is asking, what cost should I expect when I'm selling? For me, very simple. Closing costs, minor updates on the house or prepping the house, getting it market ready. Expect commissions for the realtor, and pretty much just make sure everything's up to date, I would say, and just keep it simple. But your realtor will go through the process of where you need to be when it comes to here's what you might net, and here's basically the whatever you're paying back the house. Basically, you're paying the house off, or any mortgages or anything like that that you need to pay off. Basically, here's the breakdown of everything. They'll give you a breakdown list of everything. Next question is from Brooklyn. Finally, a Brooklyn question. This is
Yeah.
from Angela. You kind of mentioned this already, but let's dive deeper. Does refinancing or pulling equity affect my taxes?
Yeah, depending on what you use the money for. Yeah, so it does affect your taxes.
All right, that's the simple answer. If you have any more questions regarding that, feel free to
Right.
reach
Just
out to
reach
Wayne.
out.
We got Mike from Bronx. He's asking, should I update my home before selling or just list it as is? That really depends on what the condition of the property is. You definitely have to sit down with a realtor. They'll go over that with you. Some things basically it doesn't cost you an arm and a leg to get repaired or fixed, or basically you price it right based on what the condition of the property is. I think this is going to be our last question. Steven from Great Neck is asking if I'm thinking about selling in the next year, when should I start planning from a tax and real estate standpoint? I guess that's for both of us. You want
Yeah.
to go first?
Yeah, I mean, from a tax standpoint, just like I said, start talking to someone who has your best interest at heart, who has knowledge and experience dealing with folks like yourself to see how they can best strategize to save you on taxes or save the most they can legally save you. Right. So that's going to be key. Talking to the right people. Timing is, and that you talked about thinking about doing it in the next year. If you're thinking about doing it tomorrow, then there's not much people can help you with. Depending on the nature of the home, the ownership, how it's owned, what type of property it is. If it's your primary residence versus an investment property, the different strategies are going to play out. So the key thing is to talk to someone early enough before you execute any of those things, because once you execute, then there's not much you can do after the fact.
My answer is similar to what you just said. Is pretty much the three factors is basically finding out what your timeline is. All the things I'm mentioning right now, you're going to be doing with your professional, whoever you hired to work with you and get the job done. So timeline's important, prepping throughout the process, and then figuring out what the strategy is going to be. That's something your professional is going to work through with you, what the strategy is going to be. With that being said, I think we're going to wrap it up right now. I just want to say I appreciate everybody taking the time to join us tonight. Here's the reality. Every situation is going to be different. Some of you might be ready to make a move sometime this year. Some of you might be ready 6 to 12 months out. Some of you might just want clarity. What is typically what we do after a session like this is sit down one-on-one and map out what your situation is based on your numbers, your goals, and your timeline. And even if you're just exploring, it's better to understand your options now than waiting until your forces, things that are out of your control, force a decision for you. So my next thing I'm going to tell you guys is pretty much simple. If you'd like to have that conversation, feel free to reach out directly to myself or give Wayne a call. Happy to connect with you and help you plan together. Wayne, give them your contact information. How can they reach you?
Yeah. Before I even do, I was gonna say before you make a move this year, going back to just to kind of like recap on everything we've discussed. Selling, if you're refinancing, if you're repositioning, this is really the window to understand what that looks like from a tax standpoint. Because once the decision is made and the transaction happens, most of the opportunities to tax plan are already behind you. So just be mindful of that. If you want to talk to me, give me a call at 718-938-4601, 718-938-4601, or go to my website www.wscullycpa.com, www.wscullycpa.com, and book an appointment so we can chat.
And to reach out to me, simple. My cell phone is with me at all times. I actually have two of them here right now. Whoops, I dropped one. So call me on my phone. My number is 917-975-5985. I'm a New Yorker. I do talk fast, so I'll slow down. 917-975-5985. Our website is mynyhomesales.com. You can find me anywhere on social media, TikTok. I don't dance, so stop asking me. Instagram, YouTube, pretty much all the major platforms, social media platforms. I'm on all of those. We appreciate you taking the time out of your schedule to reach out and watch us. And to audience, thank you so much. If you found value out of this, let us know how we can assist you and your family, and maybe connect somebody who might be going through a situation that they need to see this, need to hear this. We do have more stuff coming up, a lot of topics regarding homeowners and different subjects. I'm going to have a list at the end of the video of what we got coming up. Wayne's going to be joining us in quite a few of them. Again, thank you so much. Have a great day. Feel free.
Yeah.
There are no dumb questions. Feel free to reach out to us whenever you have questions, and we're here to assist.
And happy tax savings.